how did you find your consistency and your profitability in terms of, tracking trades or journaling or using a piece of, software or something like that?
Totally.
How did you track yourself? What was that process like for you?
So I early on very got attracted to Excel, being in an engineer in college at the time, and then eventually didn't stop that. But Excel had always been a piece of software, right, on a laptop or a computer that I always had enjoyed. I realized really quickly writing wasn't my thing, and the internet and the computer gave a lot more resources of actually sticking a chart to it. So I always screenshot my charts, attached to the trade, and so Excel for me was really early on my trading journal. I pretty much started tracking my entry, exit, P&L, win percentage, all that. It's pretty much anything I could about it that would let me remember it. So if I can go back and reflect on it, I mean, I still have that same trading journal today. I can go back to my first trades in 2016 to review them. So that was a huge edge for me, and I didn't realize at the time, but that compounding of that constant journaling, constant reflecting, beyond just mentally in my own trade, but then actually physically on a, call it screen if you want to call it, into Excel, and then it got even further. And beyond just refining your own trading, I refined how the spreadsheet looked. I started adding more notes in certain places. I started adding monthly calendars. I started adding types of charts how I can graph, if P&L is correlated with average gain or average loss, which I actually talked about also in my speech at this recent bootcamp we had, it allowed me to almost see chart patterns in my own charts of my own trading. Forget actual stocks. It was I can trade my own patterns in my own trading. I started to see it. So it was really eye-opening for sure throughout all those years building that out.
That's great. And over the years, what eventually became your trading style? How would you define your trading style as it is today compared to maybe when you first started finding consistency and profitability?
So that first setup was the OTC kind of panic dip buy. Obviously, that's a long setup. Very quickly, along came that setup, I realized one of the criteria is to kind of see that panic start was I need a stock that was overextended, that was running 2, 3, 4, 5 days in a row, probably up 200, 300, 400%. I quickly realized, I'm okay, there's an edge here to figure out how to get short that, and then almost be able to short, ride the panic, cover, and then immediately flip long. I'd almost just flip it right away. And so that ultimately led me to find consistency in short selling, which at the time, I saw it pretty even, 50-50 with going long and going short in terms of profitability and scalability. But as I think I matured as a trader, I definitely started to favor the short side. Some of my biggest trades and wins started coming from the short side. And now even today, I would say 90% of my profits are short biased and only 10% are longs. Eventually, I got away from panic dip buy. I'll still do them when they show up, but we've had many periods back in 2019 and pretty much all of 2022, 2023 that those OTCs, that liquid OTC market, it's just not there anymore. But I'll still like to buy breakouts when I like them, but I'm very picky about them. I wish I could say I have an edge there, but I think I just buy some of the biggest and strongest breakouts, which I'm very picky. It's very biased in that sense, so I wouldn't consider myself a breakout trader. I'm very short biased. I love shorting parabolics. Kind of first red day moves, overextended stocks, reversion to the mean, if you want to call it. That's kind of how I'd explain what kind of trader I've become or matured into.
Yeah.
So.
Okay, cool. Yeah, and it sounds like that might have changed over time. Are you still looking for the same sort of setups, these days? And if there's one trade or one type of trade that you think really encapsulates what you do well, what comes to mind?
It is that first kind of red day move. In terms of maturity or adapting, it was always for the very first couple of years, which I would consider myself an OTC trader. I was only OTC because I couldn't find that consistency with listed stocks. Once back in 2019 that market really dried up, very similar to what it is now, I learned and realized I have to go into listed. If I want to consistently keep that consistency, I have to continue my edge into another market. And so I learned listed trading then, and by the time 2020 started is when I really got a good feel for them. And that first edge I wanted to look for was shorting overextended stocks. Those stocks that run 2, 3, 4 days in a row, up 100%. That first time they go red, or that first time they make a bunch of lower highs, and that backside comes in, that's my bread and butter play. That's really what's kept me consistent throughout all these years, and is by far my most profitable setup. When I look at it, yeah. So
great. And you studied finance in college, right? So I'm assuming you can, understand more than most people a balance sheet and some of the fundamentals of a company. how much does that play into what you do today? And how much does technical analysis really play into your style?
Yeah, totally. I would say the finance side in terms of college didn't actually teach me all that much. It got me interested in actually personal finance of like beyond outside trading. I love just being personally financially literate in terms of other instruments, other investments, having a balance sheet of your own life, right? But in terms of the actual trading, most times I'm probably not as deep diving into the fundamentals as I should be. I'll definitely take a look at times if I want to look to show if the stock has dilution, or how scammy it is. Like if they have $0 on cash, like what's the odds of them having to be able to do an offering, stuff like that. But in terms of really deep diving, it's I would say 90-95% technical. A lot of these times I don't even know the name of these tickers. They're just vehicles, right? Sometimes I'll even go as far to say I don't even know the news. I just know, and I almost in some respects I don't like to get too caught up in it, because if I get too caught up in the news, I then stop listening to price action, and the news could be the best thing in the world, right? But if the stock's going down and you're long, who are you going to listen to, the news or the stock? So at some point I try to filter it so I'm not too convicted for something that isn't showing its hand, which would be the price action going the complete opposite direction of what I would think.